This episode is sponsored by Lupton Capital, which provides a variety of investment services to both retail and institutional investors on platforms such as Seeking Alpha, Substack, and StockTwits. For more information on these services or for links to those services, please visit luptoncapital.com. Hey, everybody. Welcome back to the Investing with the Whales podcast. My name is Jonah Lupton. I am your host. Excited to have my good friend Rob Koyfman join us today. Rob is the founder of Koyfin. It is a data website. I mean, you guys do, you provide a lot of data, a lot of different functionality. I use it a lot for looking at trends with regards to revisions, revenue and EPS revisions or increases from the analysts. I look at it to see trends in shares outstanding. So which companies are increasing their float the fastest and shrinking it the fastest. I also have, I have 6 screens in front of me. So I like to keep my my dashboard, my Koyfin dashboard on one of them, because I can see how all the sectors are doing, currencies, yields, all on one screen, which is nice. So thanks for building this website. And just talk to us real quick. Give us a little overview of what Koyfin is and why you started the company.
Yeah, thanks, Jonah, for having me. The background on Koyfin is I was on Wall Street for about 15 years on the sell side and buy side, using all the platforms out there like Bloomberg and FactSet, CapIQ and Reuters. And basically several years ago, I was in a position where I started trading on my own, investing on my own, wasn't at a firm that was paying for my Bloomberg, and started exploring what else is out there. And just thought there was
just for full transparency, a Bloomberg costs like $2,000 or $3,000 a month, right?
Yeah, it's close to $3,000 a month. So if you're sort of an individual investor, or you're not working in a large firm, you're working in a smaller firm, that's a really, really big cost. And that's when I started really exploring what else is out there between for someone that has a budget of maybe $1,000 a year or $2,000 a year for a platform like this. And what I quickly realized is you either have really basic tools like Yahoo Finance, or you have
I was just going to
Bloomberg.
say, it's like Bloomberg here, Yahoo Finance here, and like not much in between.
Yeah. So the idea was to offer just a more professional grade data, just more analytics. Even with some of the older platforms like Bloomberg and FactSet, a lot of the functionality there is they give you the data and they say, hey, put it into Excel. Whereas what we wanted to do is create all the analytics, all the graphing tools on Koyfin, where you could see those trends, where you could create those dashboards, and basically have a one-stop shop for that kind of information and those tools.
And a lot of the stuff on your website, you can then download into like a PDF file or a PNG file, whatever it is, into an image, so you can share that in your newsletter, on Twitter, in your StockTwits room like I do. You can also export data, I suppose, into Excel or CSV files, right?
Yeah, so there's still, I love Excel, and many people in the finance community love Excel. So we're not saying like, hey, Excel is bad. It's just that if you want to look at something graphically or look at a time series over time, you don't necessarily have to suck that into Excel. So I think Excel is great when you're just combining a lot of data sets, playing around with different things. But there's a lot of use cases where you just want to see the trend, like you mentioned, the estimate revisions or the estimates over time. You may just want to compare that versus a price, and to put that into Excel, format the graph, build the axes, make sure they're not overlapping. It just takes a while to do that for every single company. So what we want to do is make that really quick and painless on our platform instead of downloading it to Excel.
I mean, the other day I was putting together a spreadsheet of comparing the cybersecurity companies and valuations, growth rates, PEG ratios, and whatnot. And I used to do it in Google Sheets, but then you have to input everything manually. Now I just do that on Koyfin and then just export it and share it wherever I need to. So much easier to do it this way. Do you want to take us through some stuff? I gave you screen sharing capabilities. Maybe you can take us through some of the functionality that you see people using the most, or maybe misusing the most.
Yeah, absolutely. I'll share my screen and go through some of the functions here. So let me just pull this up.
Because last time we talked, we went through some of these this new functionality, and we looked at Celsius, for instance, and the revisions to revenues over the past couple of years. Which obviously that stock has outperformed anyone's wildest expectations. And I'd love to know if there's a way to look for other companies where you're seeing a big increase in estimates from the analysts.
Yeah, absolutely. So can you see my screen?
Yep, I can.
Yeah, awesome. So the way this works is if you hit the search box, just the type of data that feeds our platform: equities, ETFs, mutual funds, indices, bonds, forex, crypto, futures, economic data. So this concept of a one-stop shop for financial data, and our focus and the vast majority of the data we have is really for equities, ETFs, and mutual funds. Some of this other stuff we have the data, but this is really kind of where we have the fundamentals, the valuation, the holdings. But we think that today, if all of a sudden global yields or yield curves or CPI are a topic, then we want to have that data on our platform for you to analyze and not kind of go somewhere else to look for it. And then once you have this data, we create the tools and the analytics, the dashboards, the charts to really analyze that data. And that's what all this functionality is. So I would think about our platform in a couple of different paths that a user could take. So number one is these dashboards that we've created for you, like today's markets dashboard, where we have the different sectors of the market or fixed income or global yields that are updating live to give you a sense of what's going on in today's markets. We have a dashboard like market movers, where it just gives you the stocks that are moving the most on the most relative volume. So State Street here is down 12.5% on 15 times volume.
Wow.
So that's that's definitely kind of
that's a stock that usually doesn't move that much.
That's a stock that doesn't move that much, and so this is relative volume to where the stock has traded over the past 2 weeks at this point in time at 11 a.m. In New York right now. So this is a great way if you want to kind of input one of the indices, or you want to do one of the holdings, or you want to input one of your watch lists. Like you could do that for your watch list and see kind of like, hey, these are the stocks that are moving the most on the most volume. So this is a really popular feature.
I feel like I should have my entire portfolio on one of those so I can look it up and see the scograms.
Yeah, exactly. So you would just kind of like have Jonah's list or whatever your entire kind of like watch list or portfolio, and then you could sort of select it and just see kind of like, hey, what's moving the most on the most volume, just to kind of like, obviously something moving on a lot of volume gives you a little bit of a hint that that's important versus something that's not. So, but you could do this for the index as well and kind of see what's going on. The other market dashboards are here. I'm not going to go through them, but we have kind of like the sectors, the currencies, that you can see the factors. And again, this is meant to really give you a dashboard that you don't have to recreate this, that if you wanted to see, hey, which factors are outperforming, you don't have to go in and find the tickers and graph them. These are all right here for you. So you could tick these off. Like if I wanted to look at growth and value, I could put these in here, look at the past 10 years and see how that's performed over time, instead of looking that up. So we have a multitude of macro assets that you could analyze here. The next path here is the security analysis. So this is kind of like where you input a security and then get to analyze everything about that security. So I have Google here. I could input, let's say Celsius as something that, Jonah, I know you talk about a lot, but this then gives you a bunch of snapshots to look at Celsius. So this is the overview snapshot, just a quick glance at some key data, performance, valuation, cap structure, analyst estimates, and what the growth rate looks like over time, what the company does in terms of the description, if you have are just exploring a new company potentially. If the company pays a dividend, this will give you the dividend payments over time. So it doesn't look like Celsius does, but if we look at a company like Apple, then we're able to see kind of like what the dividend payout looks like over time and seeing kind of like what the yield looks like over time. Which ETFs own a company. So these are the biggest concentration of ETFs, which mutual funds own a stock. And then the earnings history, is the company beating or missing estimates for kind of EPS or sales. The red dots are missed, the green dots are beat, and this is the consensus versus the actual, and this is the surprise. So it gives you a sense of kind of like that historical trend over time. We have all the high level sales, gross profit, EBITDA on a historical basis. We also have it on a forward basis. You could add up to, I think, up to 2033 if you wanted to see kind of like what analysts are estimating for that. So all the way out. And then if I go to settings here and I show the kind of the details, there's only one analyst that's kind of forecasting 2028 on. So one analyst, two analysts, three analysts. So you just got to be careful about the number of estimates, but it still gives you a nice little time frame in terms of forecasts and the growth rates. I love this. I love this price target snapshot, which basically shows you what the distribution of buys and sells is and what that's looked at over time. 5 is a buy, 1 is a sell, and kind of where it is today. And then over here, kind of looking at the average price target on Wall Street versus where the stock is today, and just seeing what that difference is. So for Apple, it's about a 3% upside versus estimates. For Celsius, let's see what it is. For Celsius, it's about a 35% upside. So really kind of gives you a perspective on where the stock is today versus the consensus average. Obviously, this isn't going to tell you what to do, but gives you a sense of kind of like, how's the street positioned, or what's the street viewing here for the stock. This estimates overview is, I think, what you mentioned before, Jonah, in terms of looking at the next 12 months of sales or EBITDA or EBIT, and just seeing kind of like how the stock has performed against those estimates. So we want to be obviously buying stocks where these estimates are being revised up and moving up. And so this is a clear path here. If you, if you look at a company, for example, like IBM, that probably is not going to be the case, where estimates have, sales have been sort of like declining, or
Intel,
or Intel. It's going to be a different kind of graph. Sales, yeah. So wow,
I would think so. I mean, I haven't looked at Intel in so long, but I know the stock's done pretty poorly.
Yeah. So kind of just looking at, and you see here kind of like the stock starts to figure something out here in terms of declining here before these estimates start declining. So this is always kind of a double-edged sword to say, like, hey, so
the blue line is the estimates and the black line is the stock performance.
Yeah, or the stock price. Yeah, exactly. So I guess if you were sitting here and saying like, hey, estimates are going up, why is the stock declining? But stocks are always smart and tend to sniff this out before this. So always kind of interesting to and important to look at here. And then estimate trend revisions. So let's just go back over the past year. So for each one of these specific years, 26, 25, 24, 23, are estimates being revised up or down. And again, for Intel, these are being revised down. Let's see, for a company like Celsius.
Right. It's going the other way, thankfully.
Yeah. So depending on it looks like they probably announced around November 9th, looks like estimates went up here. And they've been trending up a little bit.
Right. If you scroll back, I mean, if you go to click on the 3 years, right?
Yeah. So over the past 3 years, right? And at the beginning of 2021, the 23 estimate was 300 million, right?
And now it's a billion.
Now it's a billion, right? So
I mean, that's like the dream is to find, a few more companies like this, but it's not easy. I mean, I sort of lucked out. I didn't expect this, but
and we'll go over the screening tool and how you can kind of systematically run the screen on how to do this. But
shares outstanding, that's another one too, right? I mean, Celsius is not a concern because they really don't issue more shares. But if you look at companies, some of these other tech companies like Zoom and Twilio and Coinbase, I mean, the number of shares outstanding continues to increase at a rapid pace. Can you show how do we look that up?
Yeah, so in the graphing section here, under historical graphs, really easy to just graph any sort of metric. So if I wanted to look at price versus shares outstanding, I can do that here and see kind of like what's going on here. So again, Celsius looks like it is issuing some shares, but it's not rising as rapidly as especially over the past couple of years as it was before. And then if you look at a company like, let's say like Apple, who's buying back massive
Right.
amounts of shares. I'm just gonna switch this to unsafe template so it doesn't write over. Right, if I look at it over the past 20 years, like, this company had 26 billion shares before that.
Yeah, I mean,
So
they
it's
almost
basically
bought back half of the shares. Wow.
bought
And
back half.
now look at like a Coinbase. It's
Yeah.
probably pretty ugly.
So Coinbase, like completely different, just issuing shares every quarter.
Or like, Twilio, DraftKings. I mean, they're all pretty bad.
Yeah. And so one of the things that's obviously driving this is could be like SBC, like stock-based compensation.
You can look that up. Oh, cool.
Yeah. So you can look at total stock-based compensation, and then, look at it kind of like how that's evolving as well.
Definitely correlated.
So this is, obviously there's a bunch of other things, but this tool, this graphing tool, you really can visualize any sort of data series. So if I wanted to look at like Coinbase is not a good probably one for PE, but if I look at Apple and I look at the PE ratio here, and I look at it over the past 20 years, really gives you a sense of kind of where we are today versus history. And then I can also put some kind of statistical bands on here, right? A mean, standard deviation, and then really gives you a sense of, get rid of the log, put it linear. Really gives you a sense of kind of like where the stock is relative to the past 10 or 20 years as a sign of cheapness or expensive relative to history. So yeah, a pretty quick way to do that. You could also do things like total, let's say if I have total revenue here, and this is my total revenue chart. You can also convert this to a growth rate. So under the options here, instead of showing the absolute, you can convert this to a quarter-on-quarter growth rate. And then you really start seeing kind of this cycle, right? Like before 2012, before really the iPhone upgrade cycle, it was a lot of growth. And now that the product is much more mature, you're really starting to see that cycle. And if you actually look at the stock, where the stock is historical, I'm just going to put this on if once the stock starts, so again, these bars are the quarter-on-quarter growth rate. And once you've sort of peaked in this cycle, that's typically kind of a near-term top for the stock, right? So even here was a little bit delayed, but this was the big upgrade cycle here. And so the stock peaked right after that and sort of been trading sideways.
Everyone during COVID was buying new phones, buying new computers, iPads.
Yeah, and they were getting into the services business as well. So I think their services are 20% of their revenue, up from like 2%. And that was happening over here, which was a really smart move by Tim Cook. But now that's sort of slowing down. And so although the stock, is relative to some of the other tech stocks has held up pretty well, but this is a good way to look at it. So, really we have about 400 different data series that you can look at, from valuation to cash flow statements, to margins, to growth rates, to analyst estimates, right? We talked about before of visualizing forward estimates. So you can do that here. If you wanted to, like, let's say, look at sales next 12 months. You can visualize that here, and be able to compare these things pretty easily.
And then show us some of the screeners now. So like, as I mentioned, is there a way to screen for the companies that are decreasing their float the fastest or buying back the most shares?
Yeah, so the screener here, the screener is right here called under My Screens. So this is kind of like where you would create a new screen. So you would hit the kind of plus button here, and we have a bunch of templates here that you can choose from, but I'm just going to start with a blank template. And so here you can actually screen for stocks, or you can screen for ETFs, or screen for mutual funds. But here are the different criteria. So I'm looking at just like, let's say, US and Canada, primary securities. I have a market cap filter here. Like, let's say I want to look at over 100 million. It tells me how many companies match that criteria. And here's where I start to then think about my fundamentals in terms of looking at my fundamentals. So our growth rates are kind of here. If you look at under financials, growth rates. And so you can start looking at growth rates of different metrics. So if I wanted to look at companies that have been increasing their EPS, just find the diluted EPS here over the past, let's say 5 years on a trailing 12-month basis. And let's say I wanted companies that have more than 20% growth rate. I have 1,100 companies that have done that, and I could start. Maybe I could filter the companies that have estimate revisions, right? So the let's say the sales revisions, or the revenue consensus for the second year out over the past, let's say 6 months, is over say over 20%. Now I have 34 matches, so really whittling this down. We don't have the kegger yet in here for shares outstanding.
Okay.
So you would sort of have to cross-check that on the graph, but that's a pretty good idea. So let me just put this as my high growth and positive revisions. And now these are all kind of the companies that match this criteria. So Abelmair, this is kind of the acquisition, and so estimates went up. Celanese, biotech, and you could add columns here then as well. You could add like an industry column here, and that would sort of tell you which industry it's in. And once you have the screen as well, so this is my high growth and positive revision screen, you can then copy this to a watch list. So this is my screening tool right here, and then I could copy this to my watch list. It would kind of give me this result. And now in my watch list here, which is right above my screens, I can see all these stocks here and keep track of them, and then select any column I want for these again. So these column configurations can be saved here. So this is my performance for these columns. This is my kind of standard configuration. This is my valuation configuration. So a bunch of different ways of how to slice and dice the different metrics here in the different columns.
And then you can download this or export it if you need to.
Yep. So the download button from a watch list is right here, and that would download it to CSV.
Cool.
Yeah. And the other thing which is really useful that a lot of people use this for is creating custom formulas. So under columns here, under formulas, I can basically create a formula here. So for example, this formula that I created is the FY2, so 2 years out versus 1 year out, and basically looking at the difference. So this will be looking at the acceleration of the growth rate. So
we did it last time. Yep.
Yep, exactly. So you can do that. I also have here, for example, a formula for the stock-based compensation versus the revenue.
Right.
So just looking at kind of like how that compares, and so now I can sort this and sort this by descending, and really see kind of like which companies are paying out the most out of revenue, to potentially as a potential red flag.
Yeah, I mean, small cap biotech is always on the list as some of the biggest offenders, but
yeah.
Sometimes it's just they have to, because it's better than burning cash.
No, so again, this is not going to be the one thing that tells you to buy or sell stock, but it's an interesting piece of information. Like you said, these look like, these are kind of like healthcare, small healthcare companies. So it's part of the early stage startup journey to pay a lot in options to your employees to kind of incentivize them. So I can definitely relate to that.
Go back to the you talk about the custom formula, the one that would show the acceleration in EPS. That was interesting. I'd love to see the results on that.
Yeah, so this is going to be kind of the growth rate FY2 versus FY1, and we're now looking at it for these stocks that screened well for our metrics that we chose before, which was a high compound annual growth rate over the past 5 years, and when revisions are going up. And now I could sort by this metric and see kind of like where Celanese, Kimberly, Parkland, these these growth rates are accelerating over kind of the next 2-year period.
Okay.
You can also have we also have a column here called,
because accelerating EPS, or accelerating growth rates is a nice indicator of future stock performance, potentially.
Yeah. So and you can see the breakdown here on these other columns. So my FY1 estimate here. So then, it looks like these companies have a negative growth rate next year. Probably, something happened where it's cyclical, and then it's accelerating. So maybe kind of like looking at these companies that have a pretty steady growth rate, could be even more just right. So
like CCB, I'm not even familiar with that one. I wonder if that's even a US based company.
So my screener was kind of like US based. Yes. So this is going to be, see, and again, if we want to analyze this, then we would click on this, and then look at it here. So, and then see kind of like, hey, what does this stock do? Stock, but this is a $500 million stock.
Right. So, and sometimes you have to be careful because earnings might be accelerating, but it also might be because they did an acquisition,
right?
Or there's something else that happened that's showing, a big spike in revenues or earnings.
Yeah, that's exactly right. So again, this is just a starting point to really understand or really start fishing in waters that could potentially land you a big fish. But then you have to go in and really go down the rabbit hole of analyzing the company.
Yeah, there's a couple stocks on this list that have been on my watch list for a while that I just haven't really dug into yet. One of them is MedPace. So it's interesting to see it show up here. It's funny, whenever I do these screeners on different websites, and I'm going to start using yours more often because I think it's more accurate. There's so many results, companies I've never even heard of before. Mm-hmm. It just shows there's so many companies out there. I mean, thousands and thousands of companies. On Twitter, we all talk about the same ones, but there's a lot of companies out there.
Yeah, and you can also you could also bake that into your screen, so you could actually say kind of like, hey, let me focus on companies with a number of price targets, right? Is actually not that many analysts cover a stock, right? So you can use that in your criteria. You
do it like add a criteria, the biggest upside from current price to the average analyst price target.
Yeah, so you can do that. So you can do price target versus the stock price.
Okay.
And then here it shows you the range. So let's say it's we want over 50% upside. So now there's 9 matches. Right. And so these are now the companies where you have over 50% upside relative to what the price is today versus what consensus is expecting. So just a lot of different ways that you can start filtering down the universe to some potentially interesting ideas.
Cool. I like that. What are some of the features that you see people on Koyfin not using correctly?
I don't think correctly is the right characterization, because I think people kind of like do what they want to do. I'd say there's just so much functionality that we have on our platform.
It's overwhelming. I mean, I've spent hours and hours on here, and there's still a lot of stuff that I haven't used yet.
Yeah, so there's a lot of stuff, and sort of takes a while to kind of click through it and see what's going on. I think our transcript search is super powerful. If you want to think about kind of like what companies, if there's like a particular topic or a particular product that is interesting, this could be like a good way to start filtering securities and see what companies are saying about.
Oh, so you can search for specific terms or words.
Yeah. So let's say if I search for GPT, and I don't have any filters on, these are all the companies that are talking about it. So if you click here, you'll see kind of like where this is mentioned in the in the commentary.
I saw someone on Twitter posting, which companies mentioned mentioned AI in their earnings call the most. And there were companies that mentioned it like 30, 40 times in their earnings calls.
Yeah. So I think, the companies that are focused on AI probably mention it a lot, but this is a good way again to filter for companies where there's a specific term or a product or a concept like, let's say, pricing power.
Right. Or like, margin pressure, those
Right.
sorts of things.
Yep, exactly. So,
Or like during COVID, freight costs, which companies were talking about freight costs, because freight costs were obviously going up, at a pretty significant rate.
Yep, that's exactly right. So,
interesting. Okay. So that's another feature I didn't know existed on the platform. So that's good.
yeah, we're actually doing a bunch of work with GPT and AI to summarize transcripts to make these a little bit more conversational. So we're kind of working on that in the background as well.
Is there a way to search for which companies had the best reactions to Q4 earnings? Because like I always try to pay attention to the companies, and I keep my own spreadsheet that I literally just add to manually. As we go through earnings season, I keep I track which companies had the biggest gap ups after Q4 earnings, which is usually a result of better than expected earnings for that quarter, but then also better than expected guidance going forward. But I wonder if there's an easier way to do that on your platform.
Yeah. So we don't have like the screening criteria of percentage change after results. So one thing you could do is like say, like, hey, earnings season starts today. So I'm just see all the stocks that are performing well since April 17th. We do have this earnings calendar where we show you kind of like what companies are reporting the average, the actual, and the percentage surprise. So you can use this potentially as a way to mention like
I didn't know this was a feature either. Like I usually go to, was it earningscalendar.com or earningswhispers.com, and usually just look there. But this I think this is better organized.
Yeah, this is really nice organized, and again, you can filter by like your watch list, and then once a company report, we'll have the transcript in here, and you can also add this to your calendar. So if someone's reporting, you can just kind of click on here.
Jesus,
and
how many years has it taken you guys to build all of this?
We started like 2 weeks ago. Yeah, it was pretty quick.
No, I mean,
no, I'm just kidding.
Oh.
It was. We started building. I mean, the first prototype was 2016, so we've been doing it for a number of years. Yeah.
Did you bootstrap the company for a while by yourself?
I did. I bootstrapped it till about 2019, and then we had our VC investors come in, Craft Ventures and Social Leverage.
Oh, okay. I didn't know Craft was in there. That's David Sachs, right?
That's right. That's right.
And then you guys recently raised some more capital through a kind of like a crowdfunding campaign.
Yeah, we had a round that we did with our users through a safe note. So we had a bunch of users who expressed interest in investing, and so we had a round that got some users involved, which is really nice.
It's funny. I think Substack basically just did the same thing. So I mean, there certainly is value in that. Getting some of your key customers, your core customers as all, also as your investors, keeps them loyal, for a longer period of time and more likely to tell their friends about it. How was the experience raising money that way versus now? Did you in that round, was there also institutional investors involved, or was it all, kind of individuals?
Yeah, it was a bunch of family offices that were involved as well. So it wasn't just the users, but we allocated a portion to our users. So it was a little bit of a mixed bag for the type of profile that was in the round.
Cool. Which platform did you guys use to raise the money?
We used AngelList.
Oh, okay. And did it go pretty smoothly?
It went really smoothly. Very happy with kind of doing it's called an RUV. So it's basically a special entity which collects the investors. And what's great is we only have one entry on our cap table. So the actual people investing would invest into AngelList or the special purpose vehicle that invests in Koyfin. And so that way we only have to manage from our cap table perspective one investor. And then AngelList kind of takes care of all the communication and the voting for all those investors.
Gotcha. Okay. What's the long-term game plan here? I mean, I assume it's I assume it's to get acquired or go public, right? I mean, you don't typically raise money from institutional investors unless there's an exit strategy at some point. So what would be your hope? Would you hope to get acquired or hope to go public?
Yeah, look, we're building the business to take advantage of the market opportunity, and because we think that there's a really compelling reason for our product to exist, to kind of bridge that gap between what professionals have access to and what individuals have access to. And it's interesting, our user base is mixed in that we have about 70% of our user base is individuals, about 30% are professionals. And so we've been growing every single month since we launched our paid plans. We are at about 500,000 users now. And so we're building the product, building the platform, and then I think the outcome strategy will take care of itself as long as we focus on building the product and solving people's problems.
What's the business model? Is there a freemium plan?
Yeah, so there are a bunch of paid plans that users can access. So I'm just gonna pull up our pricing. So a lot of users are on our free plan, which is super robust and covers a lot of the functionality that we discussed today.
Is it too robust for the free plan?
If you ask our users, it's not too robust. If you ask maybe our investors, it is. But no, we definitely want to provide value to our users, show them what the platform is like, and then to the extent you want to create a bunch of screens more than in the free version, you want to get the ability to look at a longer history of financials. You want to do transcript searching. You want priority support. Then that kind of gets more into the basic plus and pro plan.
Gotcha. Now, Bloomberg, would you say Bloomberg is your biggest competitor at this point?
No, I'd say Bloomberg is this thing that's kind of has so much functionality, that too much functionality for people to really keep track of. I think the other thing that Bloomberg does really well is focus on pricing for these really niche assets like CDS or swaps. And we don't have that stuff. We have kind of, I'd say, more the core fundamentals, valuation prices that kind of a broader percentage of the population needs access to.
Right. Like if you're running a $5 billion credit fund, you probably have to have a Bloomberg because you need that pricing.
Exactly. That's exactly right. So, and we have smaller family offices, or we have family offices. We have smaller hedge funds on our platform. We have financial advisors. So we do have a fair representation from the professional community. But if you're Millennium, and you have $100 billion under management, and you have traders where milliseconds count, and you need access to all these esoteric asset classes, then that Koyfin is not going to cut it for you.
Right.
And that's not what we're trying to compete with today. We're trying to really go after the more core workflows, the fundamental, the valuation driven, the graphics driven workflows, and that's where we think the biggest opportunity is.
Awesome. Well, you guys are off to a great start. And I know you got a lot of your developers are over in Eastern Europe, right?
Yeah, so we're a distributed team. We started with a team in Ukraine. When I started in 2016, that was the first team that started building Koyfin, and we still have that team in Ukraine, and that team has grown.
Was that team impacted the past year with the war going on? Were they able to keep working, or were they able to leave the country?
Yeah, I mean, it was super disruptive on a company level and on a personal level for a lot of our employees. We had one employee who was a captain in the artillery, an artillery captain, and sort of was drafted. A bunch of people had to move to Western Europe and to Lviv from Kiev and from some of the other Eastern cities. So there was a lot of things going on about a year ago when we were trying to figure this out, and I think there was just much less visibility on what the potential path to this war is. Today, kind of most people have relocated to other parts of Europe. Some people have come to the U.S.
I was just going to ask. I mean, could they come to the U.S. even if they wanted to?
Some people did. So some people who were outside of the country were able to leave the country. There's a special visa now.
Okay.
And so, but it's still difficult to leave the country for a lot of folks. because men are not allowed to leave the country, so that makes it difficult to come to the US.
What is going to happen to Ukraine? Not to kind of go all geopolitical here, but I assume a lot of people will probably never return to Ukraine, right? Is that your thinking?
Yeah, look, for sure. There's been millions of people left, and it's not gonna. I don't think those people are gonna come right back, even if the war ends immediately. I think Ukraine is just such a fascinating country. I was born there. I was born in Ukraine.
Oh, I didn't know that. Okay.
I left when I was 7 years old.
Oh wow. Do you still have family over there?
My wife has family in Western Ukraine, so
wow.
my family mostly emigrated to other parts of the world. But look, I think Ukraine is just this really special place of mixture of just traditional, maybe Russian culture or Slavic culture, let's say, and then you're now having a much more European influence. So I think there's just so much potential for Ukraine to develop and to grow, and similar to what Poland has done over the past 30 years. In that it went from kind of being in this communist orbit to now being a full-fledged EU country, and just the magnitude of the growth that's taken place there. And I think with Ukraine, it's even going to be more. So as soon as we have some peace and semblance of some visibility into the future, then I think it's going to be a really interesting place to kind of do. To have a company and to really take advantage of that growth.
Yeah, just very, very sad what's happened over there. Just you see the pictures of what Ukraine looked like prior to the war and then what they look like now, which is devastating how much damage has been done. So, I hope they can repair some of those cities someday, but like you said, it's not going to happen overnight.
Yeah, absolutely.
Well, Rob, thank you very much. Best place to find you online? I assume it's Twitter.
Yeah, our Twitter handle is @KoyfinCharts. You can also sign up to the platform. We have a contact us form on the top right. Feel free to contact us that way. Be happy to answer any questions and show you the ropes. We also have some YouTube videos on tutorials on our channel on YouTube as well.
Cool. Well, thank you so much once again for this tutorial. Really appreciate it. Like I said, every time we do one of these, me and you, I always learn something new. There's just so much functionality there that I didn't know existed. So these tutorials are very helpful.
Yeah, and let's put that 10% off link in the show notes as well, if that's cool with you.
Yep, definitely. Cool.
Awesome.
Thanks, man. I'll talk to you soon.
Thanks, Jonah.
Bye.